Thanks, Pete, for giving me a heads up. It's funny, Matt said soy and Pete said beans. Together, you made soybeans. One right on top of the other. All right, good morning. Today is the 27th day of June, 2013. It's Thursday. We made our 2 points this morning in one trade in 6 minutes. Let's see. We are now plus 10 on crude, plus 3 on copper, and plus 3 on soybeans. Pete, you got 3-2 on that. Good. It jumped. As soon as that bar closed, it really jumped. Oops, let me make sure I don't have any orders hanging out anywhere. No, I don't. Okay. We don't have a lower swing here, guys, so I'm not looking to get short again on the beans right here. Okay. The gold. I wanted to show you guys this perfect setup right here on the gold, where it pulled down. It gave a little bit of a pullback here, but it had so much momentum it didn't pull all the way back up to the BBC. The down closed right here with this huge bearish divergence right here. Okay, so the down closed right here on the gold. That was ideal entry. All right, jumping back over here. This is the Russell. Not sure where zones are right now in the Russell. Wow, the ES looks all crunched up. Okay, we're coming off a zone on the Russell. All right, that's good. So we'll draw a trend line. Okay, assuming this bar is going to close down, we have a trend line, and we have bullish divergence. Okay. It did. It hit. It was like it hit complete brick wall. I don't know what was up with it. 968.5, the low 968.9, the high. So this is what the trend line is going to be on the Russell. So the next bar may be an entry there on that. Gold just had a long entry just a second ago. Okay, watch the Russell too. We're tapping the BBC right now. If we get an up close on the current bar, that would be a long trade on the Russell. The low of this bar so far is 8.2. The high of the bar would be 8.6 on the Russell if it closes up and it maintains that low. Okay, the low is now 8.1, so the high of the bar would be 8.5 if it closes up. It didn't close up. Now we're going to need to close above the trend line, because at the close of this bar, we're going to have red on the cycle. See it? See it? So now I want to have an up close on this bar. All right, I don't like that the bar is black. 8.3 to 8.7. There it is at 8.7. That's the long trade. I'm trying to enter at 8.8. Okay, I'm long the Russell at 8.8 right now. I just filled in. I'm long the Russell right there at 8.8. And I have an 8 tick stop. Ooh, I should have an 8 tick stop on this. 8.8. Stop down there at 8.0. Okay, I'm flat the Russell. I just stopped out of the Russell. And right down to my stop. There it is. Minus 8 ticks on the Russell. And it's now moving back up. Hang on. Okay.
And right there's a perfect example, guys. People always go, well, why would you get 2 points and just quit?
Yeah, I know.
Right?
Yep, exactly.
Now, we keep trading because we're in a trading room environment, and for those who are partners, we've committed to 2 hours a day for 90 days of showing them live trades in a live environment with real money, okay? And so that's what we do for 2 hours. But this is what happens when people say, well, you know, I want to get 5 points a day or 10 points a day, or I want to trade bell to bell. Okay, you can do that, but every time you expose yourself to the market, you increase the risk of what just happened. So I know it's hard to get your brain wrapped around just getting a couple points a day and walking away. Well, yeah, but what if I get stopped out? Well, then tomorrow you keep trading until you do get your 2 points. But once you get your 2 points, you're done. So,
Yep.
I don't know what else. I mean, right here, you just saw a perfect example. 2 points, boom, 2 points back.
2 points in, 2 points out.
That'll take the wind out of your sails. Do that enough times. Now, what happens if he takes another trade, and now instead of being up 2 points on the day, he's down 4? That could happen because he's going to keep trading because we're committed to doing that for 2 hours a day. So hopefully that's what will help you as you start to write your business plan and trading plan. It'll help you to hone in and focus on why we stress that, so stringently.
Yes.
All right.
All right. Here we go. We have a couple of things setting up right here. We have gold and crude oil are both setting up a trade. Copper actually set one up back here. Okay. But it didn't put in a higher swing. So I'm not going to jump into it now. All right. The actual trade attempt was back here. All right. And up close on the current bar over here on, which one is this? Crude oil. And up close on this bar on crude would be a long trade. All right. 6.5 is the low. 6.9 would be the high. 6.4 is the low. 6.8 would be the high. Now I got to move the trend line. Okay, just move the trend line over. The Russell's setting up another one right now. Okay, the Russell's got a long trade right here, and it's setting up another one. There's the trend line there. And the crude oil's 96.07. 96.07 on the crude, and on the gold it was 1232.1. Okay, 1232.1 on the gold. I missed the gold setup there. And the crude, the Russell is dropping through. I'm going to slide the gold off because we missed that one. Unfortunately, we missed that one. 32.1, it just went up to 32.8 for a 7-tick gain. All right, keep your eye on the crude oil here. There's not a lot of divergence, and it's already above the MA1. So you got to be quick with your risk on this. When I say quick with your risk, I mean move stop to break even quickly, like I just did. Okay. And I got in at 0.8. All right. Now I'm locking in 5 ticks, 6 ticks, 6 ticks locked in on the crude right now. Seven ticks locked in on the crude. And we'll see what it's going to do here. Now, I'm running my stop really close behind price. Okay, I'm out with 7 ticks profit. I'm running my stop really close behind price because the green line got up into the cycle. Okay, and I get in at 6.8 right there. Here's the down. And gold is pulling back down now too. Oh, it was natural gas. Okay. Well, there was a trade there earlier, Pete, anyway. I can see how you would get those confused. All right. So there's our pullback on the gold. Here's the pullback on the Russell. Okay. Bullish divergence. They look almost exactly alike, don't they? Like little twins. Now we need an up close above the trend line on each of these markets to get long. All right, 32.9 is the low of this bar. 33.3 will be the high of that bar. That's on gold. So far this bar has got a low of 6.8. It will have a high of 6.12. Okay, those are those two markets right now. And they both just closed up. So, all right. Now, both of these just closed up above, and they both have black bars. That's ominous. You know, when you have black bars, you want to have. Okay, hang on. The gold is starting to run, so put your stop at break even. But you know when you have black bars, you have a lot of things going against you. In my case, 4. I'm locking in 4 ticks on the gold. Okay, I'm flat on the gold. And I'm still at break even on the crude oil. Okay. And here's the crude. Okay. 96.12 was the entry on that. And stop at break even on that one. Alright. Stop at plus 4 ticks. Plus 6 ticks. And sitting at plus 6 ticks on the crude. Alright, and I'm flat on the crude, and it slipped me a tick. Alright, so we're plus 23 on crude now, and we just got 4 more on the... Oh, that was our first trade on gold. Alright. Oh, that slipped us on gold too. We only have 3 ticks on gold. Sorry. There's the gold. Alright, so let's see, we have 3 ticks on copper, 3 ticks on gold, 3 ticks on soybeans, minus 8 ticks on the Russell, and plus 23 ticks on crude oil. That's where we stand so far. Alright, let me draw these things in here. Alright, on the gold, you see there's no room to run right here on this up close. There's no room for it to run. So I'm not going to jump into the gold right here. I'm going to let stuff reset there. It is due for a retrace. I think you're right there, Pete. So the black stair line is just as good as a trend line as long as we have divergence. Bob, I'm not sure what you mean by that, but this black stair line in the live trading room, the black stair line is used mainly to tell you when to stop looking in one direction or the other. Okay? Like if you're looking to go short, like in here, say we're looking to go short, as soon as that black step line gets up above the BBC, then you don't want to jump in on the short side. Okay, you want the MA1 and the black step line to be on the same side of the BBC. Okay, that's what we use it for in here, but there's a lot more to it, and that's all in the members area. You know, the partners meetings and stuff like that. We go over other ways to use that black step line. I mean, there's a way to use the black step line where the black step line is the only thing you have on price. No, there's not, Bob. There's not. Okay. How do I lock it? You mean how do I trail my stop so quickly, Robert? I have my finger right on the order and I just drag it up and drag it up and drag it up and drag it up. What month am I trading natural gas, Frank? We're still on July natural gas. Is that right, Bert?
No, August.
Jump to August natural gas. And August is Q, right?
Roger that.
All right, just a sec. GNGQ. August natural gas. All right. All right. Now the crude oil. Now this, Bob, this is what I mean. Right here, you see how the black line got below the BBC right here? You wouldn't be looking to go long anymore. Okay? I mean, enough things are telling you not to go long anyway, but you still wouldn't be looking for it. All right. Did I miss anything on the Russell? Not really, huh? Nope, not really. And the soybeans, we didn't miss anything over there. Wow. The soybeans got out of the box, we drew. Just a little bit. They're really choppy right now. Hey, Kyle. What's the plan on the ES today? Oh, this move up right here? Yeah, my ES is kind of, Look at how my slingshot is all chopped up in here. It says slingshot C. It's the same slingshot as you guys have. I just need to reinstall my indicator set. It'll update the whole thing. I could do that right now, but it would lock up my charts for a few minutes. I don't know what's going on with the ES right now. I mean, if we blow it up and we look at where it's going,
What price is it at?
currently it is at 1610.5. And
1610.
yeah, if I
Okay, the
flip,
tweet was at what, 1605, and the next zone is up at 1617.
yeah, I would say that that's where it's trying to get up to, Kyle.
Hey, Michael, do you remember that SEO Moz? Do you remember that company?
It sounds familiar, yeah.
Yeah, okay. Well, there's a thing called Mozcast, which determines the temperature of the Internet on any given day based on the changes in Google's algorithms. And the average temperature is about 65 degrees. You following me?
Yeah, yep. And what is
They
it
actually
today?
publish this every day, a weather report. Today, highest temperature ever, 113.
Really?
Oh, this is big. This is really big, yeah.
That is big.
Studying up on this, yeah. And it all falls to this one guy, Matt Cutts. He's like the, I'm going to see what the possibilities are of even speaking to him. I don't know that you can. People scream at him on this one forum, but I'm going to actually have a conversation with the guy, if it's possible. So, interesting. I learned so much. 113. Wow. It's going to be 129 in Death Valley next week.
Did you get your AC fixed?
Oh, man, my guy came. True to form, he's so good. He almost always charges me under $1,000.
Yep.
And yesterday was no exception. He put in a couple pounds of Freon, whatever. One of my units outside was like this huge block of ice,
Yep. That's
frozen solid.
a Freon leak.
So he put some Freon in it and blah, blah. And he told me, he says, Dwayne, it's going to be so hot these next few days. He says, I know you like to keep your AC down on like 76, but you can't do it because the unit will never shut off, and it will freeze up. And he says, you're going to have to just, suffer at 78 like normal people. And I was like, oh, man, I'm going to go get a hotel. Because in my office with all the equipment, man, 78 in the rest of the house translates to 85 in the studio. So broadcasting in my boxers today, guys. I'm sure that's a picture you didn't need to have in your mind, but
Here.
it's like a wet towel around my neck.
64.4 here right now.
Nice. Okay, we're breaking up the 1611. All right, this is nice, guys. A nice tweet. I don't mean nice and like pat myself on the back. I mean nice in the opportunity that it presented everybody. That's what I wrote about on the post last night on the Facebook page, is that the market just keeps handing us really wonderful opportunities. And it's for those of you that are new to trading, new to the S&P 500, this is why everybody fell in love with it, because it used to behave this way, and then it didn't, which is why we even got into trading things like soybeans and crude and gold, because the S&P just like went into this slumber, coma, whatever you want to call it. So we branched out into other markets to find some volatility, and suddenly the S&P is back to life again. It's really nice. So, make hay while the sun shines, as they say.
All right. Yes, get your haymaker out on the crude oil right now. We have a bearish cross. There is a space in between here. There's bearish divergence. We're testing the BBC. We have red on the cycle. We needed a down close. If we get an up close on this bar, there's going to be no trade. Sorry, I just covered up the Russell. I was thinking the Russell was weak. It did have a long trade right here, and I was thinking it was weak because of the location of this and because the bars were black. Hopefully I didn't talk you out of that, Matt, because I know you were interested in taking that long trade right there. All right, there was the down close right there on the crude at 96.10. 96.10 was the spot. A down close below the MA1 right here would be good. I'm not going to jump into it now. I'll just highlight the area right there. Okay, the crude looks like it's in a bunch of chop right here. On the Russell, it was the up close right there. Okay, the crude just dropped from 96.10 down to 96. The green line is into the cycle. We should see a pullback now. We want to see a close below this level right over here. That's what we want to see right now. It's 10 o'clock. Did we have some news event right now? We must have had some sort of news event because a couple of markets are reacting here.
I'll check for you.
New home sales? Okay, thanks. We had new home sales. I don't know whether
All right.
it's good or bad news, but some kind of news. And that's probably what was weighing on the Russell right there. And Dudley speaking at 10 too. 476 versus 460. Okay, so that's good news. A little bit good news. All right, there's another short trade right here on the crude. It's 95.
Rise in short-term rates likely to be a long way off. That's what Dudley's saying right now. FOMC could wait to hike rates even after the jobless rate hits 6.5. Ooh, the markets are going to love this. Dudley, QE could increase if labor market doesn't improve. Oh, the market's going to should go nuts right here.
Well, watch on the ES. We have some bullish divergence, and it's ready for a long trade here.
Yeah, but this is an example of the market should go nuts on good news, and
Yeah.
it's in a pullback. So
It should be. It should be. Gold, you would
Fed
think,
likely
would
to keep
be affected.
assets on balance sheet for a long time. This is a reverse of almost everything Bernanke said.
1230.7 on gold. Gold should tank on that kind of news. Gold should really be affected. Okay.
It's called the precious metal limbo. How low can you go?
Oh, on the ES, I was on a 5-minute. I'm sorry. I flipped it to a 5-minute so I could see my zones.
Big
Okay.
pullback.
Yep. Big pullback right through the BBC, so there's no trade there on the ES right at the moment. I was watching on the gold right here as it pulls back right here to give us another shorting opportunity. The last one was right over here. Okay. The down close is right in there. The down close is right in there. And now you see when you get a wick like this at the bottom, guys, you're waiting for the down close and you get a wick like that at the bottom, you got to drag this thing over. The whole bar, you got to drag it over. Start over again. Okay. That is gold. I'm going to put that back in the gold spot right now where it belongs. Soybeans, are they moving at all? No. Nothing on the beans. The gold, oops, hold on a sec. Here on the gold, you see how we got the wick down there? We've got to move it back like that. The black line just crossed up above. Bob, you see this? The black line just crossed up above the BBC here on the gold, so I'm not looking for short trades anymore.
Got natural gas coming out today.
Yep, natural gas at the bottom. We rolled to the Q of natural gas today.
And on
Okay.
tomorrow for news, we have no high impact tomorrow. Biggest thing we got is Chicago PMI. That's medium impact. Oh, we got Michigan consumer sentiment, medium impact.
Oh, and those are off time ones, aren't they? And they're
9:45 and 9:55.
Yep, and they're both for sale. So the
Yep.
market usually reacts a few minutes before the news event is scheduled to come out because you can buy them. All right.
For those who don't know, the Michigan Consumer Sentiment Report, it's a bunch of college kids who figured out a way to make some money. They call from their dorm. They call Mrs. Jones and say, hey, what do you think about the economy? And then they tick little boxes on this form, and then they turn it into who's the guy that runs the dorm? What is that guy called?
The prefect?
Yeah, right, exactly. He tallies the results, and then they sell that to companies and make a lot of money. They buy jerseys and pom-poms and all kinds of stuff, shoulder pads. Guys, you think I'm making this up? Google it.
All right, and up close over here on gold is a long trade. He's not making it up. He's not making it up.
Okay, looks like we're going to come back to test the tweet possibly, which is at 1605. Okay, we ran up to 1612. So we had a 7-point move, and now we could be pulling back to test that important area. Okay, and then off we go again, potentially. Market expectations of earlier rate hike quite out of sync with FOMC. This is interesting. Gold's up $2. What you just said about, gold should get hit hard on this news, it's actually up.
Where is gold right now? Here's gold right now.
I saw this episode of Seinfeld.
Yeah, but it was up before though.
Oh, was it? Okay.
Yeah, it's been sort of sideways since the news came out. I thought we'd see some good trending action, but on Seinfeld.
Yeah, the upside down episode. Remember?
No.
Yeah, there's an episode where they did everything backwards or something. I forget. No. I'm going to quit interrupting you. You got work to do.
That's what I've missed. Seinfeld. I haven't watched enough Seinfeld in my youth. So where are we right now? We're at 23 ticks on crude oil. We're 3 ticks on copper, 3 on beans, 3 on gold, and -8 on the Russell. That's where we are on the day.
Everybody wants to be Jerry, but let's face it, we're all George. Come on.
It's better than Kramer, I imagine.
Oh.
The Russell just had a short trade right here that I just missed. Right there. The down close below that trend line. Let me blow it up some. See that right there, guys? That was a down close below the trend line with the bearish divergence.
Good job, Paul. Way to go. Captured 14 ticks on the ES this morning and called it a day. Nice.
All right. There's a long trade right now on crude oil. Hang on. Let me show it to you. I'm not in it. I missed it. The thing that I don't like about this is all these wicks right here. You see all these wicks? It's not following through. It's in a box. But the up close right here was a long trade. Okay. Short on the ES.
Pending home sales,
yes.
highest level since 2006. That's
Yep.
a 7-year high.
That is a short there. You go. Okay. The crude did move up. I'm sorry. I didn't take the crude trade, but it did move up. And this is a short trade over here on the ES. This is a down close below the trend line on the ES. We have bearish divergence with the down close below the trend line. All right. Right there. It is.
Keep in mind
10:08.
where we broke out on that tweet, guys, because coming back down, that should be where the market would find support. Good, at least a good chance. So if you're going to be short, consider taking profits when you get to that area.
Down here, the 1605 area. Okay. How do I manage the trailing stops? I manage them manually. I drag them. Okay, the first stop that I put on, if I get into a trade, like let's say this is the Russell. Okay. If I'm in a trade and the thing starts to move up really fast, like let's say I'm long and the thing starts to move up really fast, we'll say 68 is my break-even point. I don't scroll down, find my stop and drag it up. I just put a sell stop on. Just put a sell stop on right there at 968. And once I've done that, once I put a sell stop on there at 968, then I can grab that sell stop and drag it around. Okay. I do it the same way on every market. You know, this is copper, and I doing it on copper is better because copper's not jumping around the way that the Russell is. But if let's say this was my break-even point right here. All right. So I'd put a sell stop on there like that, and then I would drag that up and down. Okay. That's how I move it. Yeah, I move it further. I just drag it up and down like this. Okay. I trail it by dragging it like this. That's how I manage my stop. Unless it's moving really, really, really fast, then I'll just put another sell stop on as it moves up. Because if it gets out of view, I don't scroll to try to find it. I just put another one on. And then I got to make sure that I clean everything up after. And that's critical. If you don't clean it up, then you have all those orders hanging out there. That's why you hear me say from time to time, do I have any orders hanging around anywhere? I'm really talking to myself when I say that. This was that last crude trade that I was worried about because we had all those wicks. It worked out pretty well, and it's at a point right now where it's due to pull back and give us another opportunity. Okay. Yes, it's a right click on the DOM. It's a right click on the DOM in an area where there's nothing in the ask or the bid. Okay? You see the little help thing that comes up? Right click, stop. See? And you can put them on in opposite directions. See? And when you do that, that would be sort of, if price had been in a channel, we'll say. If price was in a channel and you were wanting to trade on a breakout of the channel, whether it was the top or the bottom, it didn't matter. That's what you would do. Like sometimes, well, like almost all the time when Dwayne gives tweets, he'll say whichever happens first. You know, if it breaks up above this level, or I'm showing you levels with my hands. If it breaks up above this level or down below this level, I want to enter. You could put a buy stop and a sell stop on at the same time. Whichever one gets triggered first would be the one that you're entered into. Keep in mind, the other order is still going to be there. It's not going to get cleared by the entry of the first order. Okay? All right, I missed a trade on the Russell here a minute ago. Actually, no, I didn't. Sorry. Good. Glad. I'm in the process of missing a trade on the crude oil, though. And, yep, I missed the trade on the crude. I didn't fill. I tried to get filled on this, but it didn't fill me. Right here on this up close. Okay, on the crude. And now it's gone 4 ticks, and this bar is closed up after I tried to fill here. So I'm not interested in the trade now. Okay. I move it to break even. There are 2 things that happen, and I do it the same all the time. If I'm in a trade and price closes on the other side of the MA1, I'll move the stop to break even. Or if I get 4 ticks profit in the trade, I'll move it to break even. I do it the same way all the time, regardless of the market. Okay. You see this red on the cycle right here? Just a down close on this bar would be a short trade on the gold. 1230.8 is the high, 1230.4 would be the low, and I'm trying to short 1230.3. I just filled. I'm short 1230.3 on gold. Okay. Right there. 1230.3, and there's my stop. 1231.1. It didn't hit my stop. All right. Now, a close down below the MA1 or 4 ticks profit in the trade. Stops at break even, stops at plus a whole bunch. Short at 1230.3. I just picked up 8 ticks on that.
That's a technical term, but guys, by the way, whole bunch.
A whole bunch. Actually, I picked up 9 ticks.
If that had happened in soybeans, we would refer to it as a bushel.
Yes,
a bushel.
A whole bushel. All right. So I picked up 9 ticks on that. Yeah, that one worked out pretty well. I was afraid it was just going to stop me right out because my stop was like within a tick of this right up here. There is an actual another one right now. There's another short right here at 1229.7. I'm not going to get into it because it's already gone 4 ticks. Okay, so I missed the trade. I would have had my stop at break even. Had I entered that, I would have had my stop at break even, and I'd be out at break even. And beyond that, do I move it beyond the break even? Yes, I always move it. If price starts running like it just did on this one right here, then I trail it. I try to trail it behind the MA1 or behind the black line, but I trail it up. If I get 10 ticks profit in a trade, I'll usually move my stop to 10 ticks, depending how fast it's moving. Like if I would have entered on this one at 1229.7, my stop would be right here at 1228.7 right now. Okay, but I didn't enter on it, clearly, or I'd be telling you all about it. There's a long trade right now on the Russell from 968.7. 968.7. It's already gone 4 ticks. I missed the trade. I'm not going to get into it. Okay, my stop would have been at break even. I'd have been out at break even by now. I'll just highlight it for you. Okay. All right. So the Russell is still the one that's been dogging me this morning. We're plus 23 on crude. We're plus 12 on gold. We're plus 3 on copper. Plus 3 on beans. Minus 8 on the Russell. I like it when we have volatility. All right. I'm going to slide the gold off. Sliding the gold off. All right. Now, back here, I didn't say anything about this because I didn't like the way that it came together with just a little tiny bit of divergence here, and the blue line is well below the 50 level on the slingshot. But you did have a bullish cross, a pullback test of the BBC with an up close on the soybeans. But it's weak. It could really run up right here, but right now it looks like it's really sideways right here. So I didn't mention it, but it was an actual trade setup. It met all the rules. I just don't like the way the slingshot looked down there. Okay. Let's see. Oh, sorry, Frank. Just know that where it's blank down here, it should be white. It would normally be white. Okay. Sorry. It's 10:18. For those of you guys who trade natural gas, one thing is that we rolled to August gas, and why the long face, Seabiscuit. One thing is that we rolled to the August in gas, and the second thing is in 12 minutes the natural gas inventories come out. Okay. Jerry, when I say 2 points, I mean the equivalent of 2 ES points, which is $100 a contract. Okay. And the brown line stuff, it's in the workshops, and we can cover it tonight in the meeting. All right. I'm not going to go over the brown line stuff in here because I don't want to confuse anybody. Okay. Good. You just ask. Keep me on my toes.
Make sure everybody, there should be no confusion on that. 2 points in the S&P 500 on one contract is $100. 8 ticks in crude, or 10 ticks in crude, is the equivalent of 2 points in the S&P. You want to walk through the other markets here, Michael?
Sure. In crude oil, 10 ticks is the equivalent of $100. What we're looking for is a $100 gain daily. That's what we're looking for.
On one contract.
On one contract. $100 per contract.
That's the same as 2 points in the S&P.
Yep. So, for instance, on the Russell, it would be 10 ticks. On the NASDAQ, it would be 20 ticks. On the ES, it would be 8. On, what is this? On this is copper. On copper, it would be 8 ticks. On natural gas, it would be 10 ticks. On gold, it would be 10 ticks. On crude oil, it would be 10 ticks. On soybeans, it would be 8 ticks. What else do we trade in here? I don't know what
That's about it. We haven't traded the yen in a long time.
We haven't traded the yen, but if we did trade the yen, it would be 8 ticks on the yen. Okay, and the euro, same thing, would be 8 ticks on the euro. Okay.
Actually, Fry, it's one-fifth the size. One E-mini contract. I'm sorry, 5 E-mini contracts are the equivalent of one large E-mini contract. One large contract in the S&P, 5 E-minis equal one large contract. So you can trade one contract in the pit or 5 E-minis, and you have the same results. That's how that breaks down.
Thank you.
And most of you, don't let that confuse you, because you're never going to trade the big contract, okay? You're going to just trade the electronic E-mini that you see in front of you.
Nobody trades in the pits anymore, right, Jerry?
And the reason the E-mini was even created was because the price of the big contract got to be so high that not only retail traders could no longer afford to participate in it, but even smaller institutions and funds were having a difficult time. And that's what led to the creation of the E-mini product. E-mini is one-fifth the size of the big contract. But again, you don't even have to worry about that, because you're going to always trade the ES, the one you have in front of you right now.
Back to me, Boston.
Yeah, back to you, Boston. I'll take care of this email with Leslie right here.
Okay. I didn't see them from Leslie, but I will in a little while. But you're taking care of it.
Yeah, I'll take care of it now.
Delays, failures on order entry, modification on demo. Okay. Yeah, that is true. On the demo accounts, guys, there can be issues with on some of the markets that are really volatile, like crude oil and gold, and maybe even soybeans sometimes. There can be issues if you get stopped out. Sometimes your stop out will be 8 ticks, but it'll register as like 58 ticks or something like that. You know, they have an issue with the demo DOMs that they're working on. Okay, I just want you guys to know that you're not actually losing that much money if you get stopped out, and it doesn't happen in a live account. Okay. Did we miss this trade on the ES? I don't have an ES DOM open, so I don't actually place the trades on the ES, but there was a short trade right here on the ES that would have stopped out. Okay. Right here on the ES, a short trade that would have stopped out right there. Okay. You're talking about a long. There's no long here on the ES right now. We still have bearish divergence. Okay. We still have the bearish divergence. The thing we did have a long over on the Russell. Okay. Back here on this up close, it was a long on the Russell right there. You see we had bullish divergence in here. Okay. Oops. And currently, it is pulling back and attempting to give another long opportunity here on the Russell. All right. We want an up close above this trend line with the bullish divergence. Yeah. All right, so we want an up close on the current bar on whatever this is, the Russell. Right there's a long 970.3 on the Russell. 970.3. The high of the day on the Russell is right up above us right here at 970.6. Okay, the Russell is our thorn so far today. But that's a long trade right there. Okay. 1, 2, it's the third leg. Actually, 1, 2, 3. You want to get a close up above the MA1 on this bar. Okay, a close up above the MA1 on this bar. Gold just started to run up too, and the crude oil just started to move up as well. All right, over here on the ES, what you're looking for, well, here on the ES, let me just show you. On the ES over here, what you are looking for down here on the bottom is some bullish divergence. Okay, it's not there yet. It's not there yet. On the gold, this is a long trade right here from 31.4. I'm not in it, but I'll draw you the trend line. Okay, actually the long trade was from down here. My bad. When I draw the trend lines, I can see it a little clearer, but the long trade was from down here at 31.4. I mean 31.0. Okay, that was an up close above the trend line. You want to see that put in a higher swing. Let's see, on the ES, you want to see it run up a little bit, probably get up above 16.12, and then have a pullback. That will give you some nice divergence over here. That's what I would rather see on the ES. Okay. What's in August, Bernard? Oh, the X month for soybeans. It's November. November. August is Q. All right, 1026, 1026, and all's well. We're still -8 on the Russell. We're +23 on crude. We're +3 on copper. +3 on beans. +12 on gold. And we're an hour into the day. Yeesh, with all those chart problems we had yesterday, we were just getting started. All right, gold. Right here, you see how the green line got into the cycle? And we don't have a higher swing. So gold is showing topping action. Okay, we need to see gold get through this level right here. That's what we need to see. It's got to continue the trend. Okay. And crude oil. All right, the Russell broke out to the upside. Stop should be at break even on the Russell. Okay.
Horn swings to limits on China-sized errors.
We're along the Russell at 870.3, guys. I am going to exit the Russell right here at the high of the day if I can. Okay, I just got short the Russell. I just exited the Russell at 71.1, so I am now flat on the Russell. The up close is right in there. 70.3 up to there, and this was the little box we were waiting for it to break out of. Now watch for the green line to get up here. This is the high of the day right here. All right. And you got 3 points on the ES. Great, Kyle. Great. The crude oil just gave a long opportunity in here. I just missed. Sorry, guys. All right, gold is pulling back right now to the BBC with bearish divergence, so gold could have a short trade here on a down close. See, the high of the bar is 1230.8. The low of the bar is going to be 1230.4 if the high stays in place. We had our bearish cross, our pull away, our test, and you see how the black line is still below the BBC? So we can still go short over here. There's another trade. Never mind, I won't bother with it. There's a trade over on the crude, but while I'm explaining this, if we get a down close here and the cycle stays red, that's still a short trade here on this gold at 30.8. That's still a short trade there on the gold at 30.8. Now it went 4 ticks in favor of the trade already. So, oh, it actually didn't go 4 ticks. It went 3 ticks. That's good. Okay. So stop should be a break even. Okay, on the gold. I am now going to lock in 4 ticks profit, 6 ticks profit, and I'm out with 6 ticks profit. Okay, now did you see on that what I was explaining about the black line? Even though we got all the way up here, we still had a short trade because we still had red on the cycle. Okay? So we just needed the down close. And yeah, I know I only took 6 ticks out of it, but we're happy 6 ticks. There's the trend line. In case we don't hit the BBC here, there's the trend line. Okay, now we've hit the BBC and we have blue on the cycle, so we need to close below the trend line. Now watch the black line here. Okay, watch this black line right there. See if it gets up above the BBC or not. Yeah, about that, Kyle, about 4 ticks. Until it really starts to move and the green line gets down into the cycle. When the green line gets down into the cycle, the question was how close do I manually trail my stop? And it's about 4 ticks is what I usually do. But when the green line gets down into the cycle, that's after I've gone to break even. Then I trail it by about 4. But when the green line gets down into the cycle, then I move it right up behind price because I'm expecting price to pull back when the green line gets to the cycle like it did just here. Okay? You anticipate that. All right, we just missed another one on crude. And another one on the Russell. But the good news, you see how the black line just got up above there? So there's no more trading here on the short side. We missed this one over here on crude oil. Well, was there one right here? Yeah, there was a follow-up right here. That would have stopped you out, and then you wouldn't have taken that anyway. So never mind. There's the trend line on crude. It's got some bullish divergence now. Over here on the Russell, there was a follow-up right in here. Is that right? Yeah. Right here. That you could have taken for some ticks in there. What did I want to show you? Oh, here it was. Over here. You see how I had drawn this in over here? Stephen Leslie had said this morning that they had a problem with it in the pre-market. She had said that there was a problem with the Russell demo in the pre-market and they had to fix the data. So I don't know if everybody else is having trouble with it in the demo, but I think they might be. Okay.
With what?
The Russell demo.
Oh, I haven't looked at it.
Order placement. All right. This was a crude run-up right here. The close above the trend line was right there. There wasn't really much room to run in here. I wouldn't have taken it even if I saw it. Okay. What I wanted to point out was I said this was topping action up here if we didn't get a swing high above that. And the reason it's topping action is because the the green line down here on the slingshot got up into the cycle and we didn't put in a higher swing. Every time you get divergence, like we have right here, every time you get divergence, when that green line gets back up into the cycle, because that's what you expect to happen every time, when that green line gets back up into the cycle, you want to see it put in a higher swing or a lower swing, whatever the case may be. You want to see a higher or a lower swing. That will continue the trend. Okay? Right here's a long trade. Right there was a long trade at 32.4.
Hey, a question just came in via email, but could you show it on the chart?
I can. Let me go.
Please remind me, where does the black stair-like line have to be in relation to the BBC for a bullish trade versus a bearish trade? I know you've answered that before, but please clarify it for me.
I have. Okay. We just had one of those a minute ago on gold.
Well,
right here.
Anytime the black line is above the BBC, you're looking for a bullish trade.
Yeah, what you want to have is the black line and the MA1 on the same side. Whenever you're trading, you want to have the black line and the MA1 on the same side. If you're going long, you want them to be above. If you're going short, you want them to be below. The time to stop looking for a long trade is like right now. If this bar closed down and the next one closed down, the black line may be below the BBC. At that point, stop looking for the long trades. Okay. Okay, it didn't close down. Now we have to draw a trend line. We have to draw this trend line. Bullish divergence, you would need to close above that trend line. Yeah, it seems like a lot of money's flowing back into the equities here because the ES is running up.
The S&P guys, our target overhead 1617 off of that tweet. We didn't pull all the way back to test it. We came close. There's so much bullish momentum in the market, and plus all those comments that Dudley made. It took a minute for the rally to ignite, but ignite it did.
It did.
Nice little pop here from 1609 to 1614 over the last, 30 minutes? 20 minutes?
Yeah, 20 minutes, 30 minutes. Yeah. It's 10:36. We missed the natural gas inventories when they came out. Sorry. For you guys trading the natural gas. The inventories came out here. Price dropped. I'm guessing that the natural gas inventories were higher than expected.
I can check.
Yeah, the soybeans need to pull back to go long. It's okay that it's at the high of the day here, Pete. If it pulled back and it gave us the opportunity here on the beans, punching through that high of the day would be actually a good thing. If we look at this thing on a bigger picture.
Natural gas, I've got a red number.
You do?
Let me read it. The forecast, the forecast was 88 billion. The actual was 95 billion.
Yeah.
Why would they print that as a red number?
What was the prior month?
Oh,
the prior week.
Prior was 91.
That's weird.
Yeah.
Well,
Forecast 88, previous 91, actual 95. I think they got that. I think they got the little error wrong on that one. It's a number. If they printed the number right,
yep.
Maybe they got the number wrong on this report.
Now, here's a good example of the black line right there, guys. You see how it's down below the BBC, and we have bullish divergence. We're not going to look to go long here because the black line is below the BBC right here. All right, that's a perfect example of it right there. Yeah, the market's reacting as though we had a bigger pile. If you have more supply, price goes down, and that's the way it's reacting. So, yeah, they must have just got the arrow wrong on it. Okay, do you guys see that? Those of you who were curious about the black line, you see that right there? How it's down below it's below the BBC right here. And we have bullish divergence. Normally we would still be looking for the long trade. We would be looking for the close above the trend line. But we're not going to now. Okay? Whether it works or not, we're not going to. Okay, I'll highlight that area with a square and we can come back to it in a few minutes. Paul E. from yesterday. See that thing sloping down? I don't like that at all. On the soybeans, here's our pullback on the soybeans, Pete. This is the pullback we've been looking for. We have bullish divergence. Now the cycle is still blue. I don't think it's going to be on an up close of this bar. Okay. Yeah, we should have if we get an up close on this bar and the cycle stays blue, that would be a long trade on the soybeans. If the cycle turns red, then we need an up close above the trend line. Okay. And this is what's happening right now over here. The black line was right here when we originally looked at it and we said we're not looking for long trades anymore. It's fallen through. Everything's fallen through, and we're now starting to set up shorting opportunities. Okay. I'd love to get into the soybeans again if they give us the opportunity. On the ES, we have a little bit of a trend line here. All right. The cycle turned red. Okay, so there's no trade yet. You need the up close of this bar. On the ES, we have bullish divergence, and that's our trend line. You need an up close on the current bar. On the soybeans low, this bar is 81.75. The high of the bar would be 82.75. If the low stays in place, the high of the bar would be 82.75. I'm going to put a buy stop on at 83 right now on the soybeans. Okay, at 83. That's one tick above where the high of the bar should be if the low stays in place. Where the high of the bar will be if the low stays in place. All right, because soybeans, when they break, they can break really quickly. Okay, you see how the low just got lower? The low just got even lower. It's now at 81, so the high would be at 82. So my buy stop, I am now going to drag to 82.25, which is still one tick above the high. All right, see it? 82.25. Now, if the bar closes up, it's going to trigger me into a long trade on the soybeans. Look at that natural gas, man. That thing is just tanking. All right, on the ES, we didn't get an up close above the trend line. So we got to remove the trend line, and we'll redraw it. I'm ready to go long here on the soybeans on an up close, and this is what it looks like on the ES right now. Okay, I thought I'd bring copper back up for you, Frank. I know I had hidden it. When I say the pile is bigger, I mean, if you picture it in your mind, you know, when you're looking at the results of the inventories, you know, if there's a bigger pile for people to choose from to get rid of the pile, they have to drop the price. Oops. All right, the soybeans didn't close up, they closed down, so now I got to move the trend line. Oops, sorry, no more moving the trend line. We hit the BBC back here. We still just need an up close, but now the low of the bar is at 80.75, so the high of the bar is going to be at 81.75. So my buy stop is now all the way down to 82. All right, 80.75 to 81.75 with a buy stop at 82. So if this bar closes up, I'm getting in. Okay. Now this is probably worth noting too, right here, guys. Once the black line crossed down, you see how it started to consolidate and get choppy in here? Oops. You see that? All right. It is now 10:43. And we are plus 18 on gold, plus 3 on beans, plus 3 on copper, plus 23 on crude. What does that come out to? 23? It's 330, 410. 440. 477.50. There'll be time enough for counting when the dealing's done. All right. The low right here is now down to 8.25. We still just need an up close above the trend line. I don't like the black bars, but we still just need an up close above the trend line. So 80.25 is the low. 81, and this has got the full 4 ticks range in it. I'm now going to move my stop to 81.50. My buy stop to 81.50. So if we close up on this bar on the soybeans, it's got black bars and everything. I really don't like the trade, the way that it's coming together, but I'm still going to try it. Yeah, I know, with all the black bars and it's falling through the BBC. It's not showing a lot of strength there, but alright, well, it's up to this bar right now, because if this bar closes down, then the black line is going to be below the BBC. Okay? So it's up to this bar right now. My buy stop is now at 81.25. Okay. And the gold has a shorting opportunity right there on the down close at 1231.8. 1231.8. All right. Gold's running down, and my order is going to get taken off of the soybeans. Right about on the down close here. There it is. Okay, my order's off on the soybeans. You see the black line just moved below the BBC, so there's no trade there on the beans. On the gold, this was the down close right here. I didn't get filled. I tried to fill, but I didn't get filled. Okay. And is crude topping out? I believe it is. Well, it's actually really in chop right here. You see the problem with the crude? It was moving up. Oh yeah, now it's crunched up too much. It was moving up, but we lost our divergence on the long side. Okay? We still kept putting in higher swings, but we lost our divergence. And now it's got bearish divergence, but it's trading above the BBC. So it's not necessarily topping out, but the cycle's got to reset. What you need to see is a break above there or below right over here. All right. That's what I would want to see on the crude. It could be topping out right here, but it could also just be the cycle resetting down here. You know, we're not going to have any short trade, and we're not going to have any long trades until the cycle gets overbought. So it's going to have to break up above that level for that to happen. And we could have short trades here, but I would like to see it break down below this level before we do. Okay, you see how we already have bearish divergence here, but price is trading above the BBC. So crude's a little messy right here. Not really something I want to get trading in. That gold trade that I showed you a minute ago just dropped another 10 ticks. The entry was up here at 31.8, and it dropped all the way down to 30.1 for $170 a contract. Let's draw the trend line. I thought that white bar was... Okay, that's an actual short trade right there, too, that I just missed. Copper. Are you talking about copper, Frank? All right. Well, I'm not down on anything anymore. It's 10:48. We have 45 minutes left, roughly. If you are in here on the free trial and you want to get into the live trading room tonight, you need to become a partner. Okay? You need to become a partner to get into the live trading room tonight. Bill C., I'm sending you an email right now.
Hey, do you know Stock Muffin?
No.
Stock Muffin just had some very nice things to say about us on Stock Twits.
Really?
You want honesty and a whole lot of teaching with some great custom indicators, these guys are the real deal. I don't know who this person is. That was very kind of them.
That was very kind of them.
Yeah.
I don't know who Stock Muffin is. Maybe I ought to look it up. Alright. You did Wayne. You go. Oh, there's the email that you were talking about. Okay, I hadn't even gotten it when you were talking about it. Now I'm up to date though.
I get mine by airmail. That's probably why it got.
Ah, yeah. Yeah, mine was on a horse. All right, Pete. Yeah, the beans, you know, I like them. I like the beans a lot, but I don't like them right now. They're giving mixed indications here. Everything's really slowed down here. You know, everything is really slowed down. We have 45 minutes left in here. I mean, we have plenty of trades that we've taken already. The crude oil is breaking up above that level that I wanted to see. I had said we want to see it get up above that level. It's going to need to get up above that level to move the cycle back into the overbought area so we could start looking for long trades again. And we just closed up above there. So a pullback would give us some divergence and we could start jumping into the long side of the crude again. Okay. Yes, you need to have more than one kind of paint there, Pete. There's always something wet, something fresh. See, we just have just a tiny bit of divergence here. I'm not going to trade on that little bit of divergence, but it's coming together. All right, I'd rather see this bar close down and the next one give us an opportunity, but that's not the case. Okay, there's the trend line. So we still need to close down to get below the trend line. That will give us the divergence I want. And there it is. That's the divergence I was looking for. Okay. Now, an up close, any up close right here would still be valid because I'm not in love with this, but an up close right here would still be valid according to the rules. We've already hit the BBC, so I can't adjust the trend line anymore. So just an up close right there, 96.39. And that's what there's not really a lot of room for this thing to run. When I draw trend lines, do I use the first two bars or more? Well, I start with the first two bars. I always start with the first two bars. Okay, and then as price approaches, like this is a good example. Okay, I start with the first two bars over here, and then as price approaches the BBC, once it hits the BBC, I don't move it. Okay, I don't move the trend line anymore. But as it approaches the BBC, if you get wicks like this up above the trend line, you have to take those into account. You have to adjust your trend line to take those into account. In this case, we hit the BBC right here, so you don't move the trend line anymore. You only adjust the trend line until price hits the BBC. Okay? Like in this one right here, it went straight down and hit the BBC. That was okay. In this one over here, the cycle was blue, so it didn't matter. We didn't need a trend line. Let's see. There's got to be some example here I can show you. In this one right here, the original trend line was like this. Okay. Well, actually, the original trend line was like this. It was from here to here. Then we got this wick up above, so you have to draw another one like that. Then we got another bar up above. Actually, that was a close above the trend line. There was a long trade right there. What was this? Soybeans. Yeah, there was a long trade right there in the soybeans. Why didn't I notice that? I don't know. But I didn't notice it. And when price is pulling back down to the BBC, you keep adjusting your trend line to take the wicks into account. You keep adjusting your trend line to take your wicks into account until price hits the BBC. Okay. Hang on. I see you guys typed a couple of messages in there for me. There's nothing here on the soybeans right at the moment. In the crude trade, the cycle line was pointing downwards, but you still considered it divergence. The direction of the cycle doesn't matter as long as... Oh, hang on a second. I'll show you. I'll show you in a second. Long on the Russell, no, there's no long on the Russell right here. Okay. Oh, well, hang on. Let me switch to an 8-tick chart, and then I'll tell you. Well, there's definitely bullish divergence. The long on the Russell was actually a couple of minutes ago at 71.9, but you might have typed that a couple of minutes ago. But I'll show it to you because you're on an 8-tick chart. So here was your trend line. There was the close above the trend line with the bullish divergence. Okay, so right in there is where you would have gotten long at 71.9. Okay, Lori? All right. In the GC trade, let me back it out. You were saying that the cycle was red. Now, it's okay if the cycle is red, but you need confirmation. You see in here? The trend lines come into play on 2 occasions. One is price does not hit the BBC on the pullback, and 2 is if the cycle's the wrong color. All right? If the cycle was the right color and you hit the BBC, you don't need the trend line. If the cycle's the wrong color or you don't hit the BBC, or both, that's when you need the trend line, and you need the confirmation of the close below the trend line or above the trend line. Okay? Does that make sense? Did you understand? I'll go over it again. I'm sure I will. It's only 10:56, so I'm sure I'll cover that again in the next half an hour. But I sent you these pictures, right? I'm sure I did. I'm sure I sent you these pictures and videos and all sorts of stuff. I can send them again, though, if you want. Yeah. Yeah, you need to use both eyes when you're doing this. Gold. Where were we on gold? Back here, we had a short trade on gold. Back here, there was a short trade on gold that would have stopped out. Then everything reset. Then it came back and started moving down again. Now right here we have bearish divergence, a pullback. I got to draw a trend line because I want to make sure I put my ellipse in the right place. There's the trend line. So this down close right here was bearish divergence. I mean, with bearish divergence was a shorting opportunity. All right, I'm not in the trade right now. And is there a workshop video on the trend lines? Yes, workshop number 93. 93. Dwayne, did you ever get the request into the team about blocking up the stuff in the members area? Putting it in groups.
Yes, that's what they're working on today.
Okay, good.
They were working on it last night when they lost access, and they're back at it again this morning.
Okay, good.
In fact, that's going to be their task until it's completed.
Excellent. All right. If you got into the gold trade, it's gone 4 ticks. Stop should be a break even. I would definitely be out at break even right now, or maybe with a tiny bit of profit. All right. All right. On the crude oil, it's really struggling right here. The crude is really struggling. Okay, we got that close up above there, but it's still choppy. It fell right back inside this area right here. And now we have the cycle is down on the bottom again now. The copper. This is the copper. Okay, you got short over here at 585 Pete, or 580, something like that. I I eyeballed it. I didn't draw the trend line. There's the trend line. You're right, I didn't draw the trend line. So it would have been down here at 565. No, wait, the cycle's red, so you didn't need the trend line. That's why. You didn't need the trend line. Morning, Jeanette. Good morning, Jeanette. All right. It is 11 o'clock. We have a half an hour left in here, guys. Does anybody have any questions that I didn't answer? Has anybody asked any questions that I didn't answer? If so, please just enter them again. Okay, just copy and paste them. I do not know that. Frank. On what market right now, Bob? What are you talking about? So I can... The... Gold, but not right now. Okay. The thing with the green line, it's not so much the green line, it's the cycle portion. All right. I don't want the cycle. If I'm looking to go long, I prefer to have the cycle above the 50 level. That's not a hard and fast rule. It depends on when it happens in the trend. Because a lot of times you'll get the start of a trend. There was one a little while ago somewhere. A lot of times you'll get the start of a trend, like way down here. I like down here. You'll get the start of a trend like this on the soybeans. Okay. I prefer to have it be up here so you have more divergence, because when you have more divergence, you have more room to run. Okay, because you anticipate the green line getting up into the cycle. And if this is the way it is, then there's not a lot of room for it to run. You see this gave just a little run right here, a couple of cents, and then it had to pull back. And the pullback pulled back deeper than the original entry. Okay, whereas normally if the thing is... Well, soybeans this morning aren't a great example to use, but normally if there's a lot of divergence, then the pullback is gonna give you a higher low and a higher high. You'll have your higher high from when the green line got up into the cycle, and you'll have your higher low from when it pulls back. But if you start out this way right over here, and this is kind of, it's important, and we'll cover it in the partners meeting tonight, I guess. Let me write this down. Partners meeting issues. Okay. And what was the other thing that we wanted to cover in the partners meeting tonight? Oh, the brown line. Right. Okay. You want to have higher highs and higher lows. You want to be trending when you get into a trade. Okay. Now, it's not always going to be the case on the very first trade, because there has to be a change of trend. So the very first spot where you have a change of trend may not give you a trade setup, or it may give you a losing trade setup. But as the market develops after that, you should have higher highs and higher lows from that entry point, from that original spot. Okay. This is a good example right here of why this whole thing right here, the way it all came together, is a good example of why I like to have the cycle portion be up above 50 when you have your divergence, particularly on the first trade. Because, I mean, this all worked out just fine, but you see how deep the pullback went? It actually almost gave a direction change right here. And that would have just been chop. Does that make sense? I'm trying to make sense. I'll do it slower in the partners meeting. Of course, you got to get into the partners meeting. All right. All right, on the gold right here, we just had a higher swing, a test of the BBC with an up close and bullish divergence. You needed to get above the trend line. Now, in this case right here, you see how we have this wick right here? But I'm not taking that wick into account because we hit the BBC right here. Price hit the BBC, so you don't redraw the trend line. Okay, if we hadn't hit the BBC, I would redraw the trend line to take that wick into account. But because we did, it's just the first two bars up here. All right, and so this was the up close right here. That's where you would have gotten long on gold, right there. Okay, the Russell just went up to a weekly trading zone. So there's no going long there on the Russell, and as a matter of fact, I would hold off on the ES as well. Well, the ES doesn't have a long trade anyway, but all right. I know the third rail. Well, people are calling it different things. Or the maroon line. The maroon. Maroon. All right, back over here on the copper. You have red on the cycle. You're testing the BBC. See if the cycle stays red. Okay. Yeah, down close over here. The high is 585, the low is 565. So it's got the full range of the bar right here. A down close would be a short trade, but it is an orange bar. But a down close would be a short trade here on the copper. Okay, I think the cycle is going to stay red. There it is on the copper. All right, 65. Gold again. I missed the gold again. Crude oil again, too. All right, on the gold, when you said gold again, I think you meant back here. Did you type that in back here, Matt? I think you did. Right. Oh, it was setting up over here, but it dropped through. Okay. And it doesn't have any divergence anymore. The crude oil's got a long trade right here, though. At 96.48 on the crude. Okay, it put in the higher swing. It's even got an orange bar. Okay. Okay, I just jumped in the crude at 96.47. I'm long crude. 96.47 right here. And I'm short copper at 560. Okay. All right. So now, when I get 4 ticks profit in either one, or I get a close on the other side of the MA1 in either one, I'm going to move my stop to break even. On crude, I needed to go up one more tick right here, and I'll move my stop to break even on that. And on copper, I need to go down one more tick, and okay. Stops at break even on the crude, and the copper, I'm still waiting. I'm out at break even on the crude, and my stops at break even on the copper. Okay, there's my stop at break even on the copper, and I'm out at break even on the crude. Wow, that thing really came down fast. Crude, and I'm short copper at 560, and it's still going down. Alright, now what we're looking for on the copper, it should get through this level right here at 525. We're looking for it to get the green line to get all the way down into the cycle here. Okay? We're looking for the green line to get all the way down there into the cycle. This stops at break even, so I got no risk on the trade at the moment. Okay. Let's see. The Russell sold off the weekly trading zone. Look at the Russell. It went up to the weekly trading zone to the tick right there at 973. And it sold off the zone. That is just amazing. How does he do that? How does he do that on Monday? How does he know that it's going to stop right there on Monday? Genius, I tell you. All right, come on, copper. Get down there. We need a close down below the MA1. If we get that close below the MA1, we should see a pretty good drop. It looks like a head and, yeah, it is a head and shoulders pattern. Here's a head, here's a shoulder. It's building the other shoulder right now. It actually wouldn't surprise me to see it pull back up and make a better shoulder over here. That said, I'm considering taking profit on it right now. Yeah, the neckline. Let me blow this up so you guys can see it a little clearer. Okay, here's a shoulder, here's a head. The neckline is right down here, right where it's at. If it breaks the neckline, you should see a big decline all the way down here to this level. But it wouldn't surprise me to see it go sideways and build a shoulder just like this one. All right, I'd like to see it break the neckline. Get down there. Because we should see it get all the way down here. 430, sorry. That's what we should see. Tell you what, I'll exit the trade and then it'll drop for all of you guys. Alright. I'm not exiting the trade yet. I'm still in it. If this bar closes down, it should go pretty quickly, I would think. And if that bar closes down, I'm going to lock in some profit. Alright, as I look around, we don't have... We don't have much else going on right here, right at the moment. So the copper trade is the one. There it is. Okay, it closed down. Now this is how I lock in profit. Okay, I just locked in 4 ticks profit. All right, and now it just took me out with 4 ticks profit. Okay, so on copper we are now at +7. I really wanted to see it move down. I think it still will. It's just got to build this shoulder over here. And if it's going to build that shoulder anything like it did the other one, it's a lot of chop building the shoulder. Okay. Yep, I'm happy to take 4. We have 15 minutes left in here this morning, guys. 15 minutes left in here. On the Russell right now, we're pulling back up. This is... let me see. We have a bearish cross space, tested the BBC with a down close. We have just a tiny bit of bearish divergence. A tiny, tiny bit. I'm not that interested in the Russell right now. Gold's got a continuation trade right here. A down close on the current bar on gold would be a short. Okay. It's got a high of 27.4. It would have a low of 27. So the full range is in this bar right now. Just a matter whether it closes up or down. Okay. And what's it going to be? There it is. It's a down close. All right, that down close is a short entry right there. All right, at 27. I did not take it, but I did tell you about it. Watch, we break down below here on the copper. See, we have a head and shoulder pattern right here on the slingshot. This is the head, this is the shoulder, this is another shoulder. It's sort of delayed after the actual price showed it. The green line showed it. You see that? All right. It's 11:16. Does anybody have any questions that I have not answered? Anybody who's in here on the free trial have any questions that I have not answered? Bill C., did you need instructions on importing the layout? I can send it to you in a separate email if you do. All right. The gold just gave another shorting opportunity over here. All right. I'm not in it. That one is a little long on the tooth. You're killing it. One tick at a time there, Frank. Okay, Bill, I forgot the question that I asked you. Did you want me to send you the video? Sorry, my mind's a little mushy. Wait till after the partners meeting tonight at midnight.
Talking to me?
No, I was just sort of talking to myself. I'm already rambling. I'm already rambling, and it's not midnight yet.
All right.
Okay, I'll send it over to you right now. Well, I'm actually whispering to my dog because she's in here with me. So it's not really just me. I'm not crazy. Is the ES resisting at 9 1/4? Oh, it looks like it, but hang on. I'll blow it up and look at it in more detail with you in a second. Okay. Just want to send this thing.
Yeah, keep in mind that the distance from that tweet up to the zone at 17, that's a lot of distance to cover. And so it's not unusual for it to make a couple of attempts, you know, make a leg, retrace, a leg, retrace, a leg, retrace, until it finally gets there. The only thing that would negate the market trying to go to the weekly trading zone overhead would be if we take out 1605 on the downside, the number that triggered us into the tweet, and then we hold 1605 on a pullback. Break below it, and then 1605 holds on a pullback. Now we start to look at going back down to the zone below us as opposed to the one overhead. That's your line in the sand.
Yep. On the downside, I would look for this level down here, maybe a little bit above it, so you don't put in a lower swing. Okay, something in this area right here on the downside of the ES. Okay, because what you don't want to do, you see how we have a lower high right here? What you don't want to do, and we actually have a lower low. We have a lower high and a lower low. You don't want to start putting in more lower lows over here. All right, if you do that, if we do get down below this level right here, and we start putting in more lower lows, then I think we probably will go down, back down to the zone down below us. Okay? All right. And that's a wrap on that. There's the entry on the ES right there. 9 1/4. Okay. Yeah, right in here, Stephen. That's the spot. Okay. Oops, that's a bad trend line. That's a better trend line. It's still not good, though. There. All right, there's not a lot of room for it to run unless it goes through this level. If it goes through this level, then it's got a lot of room to go. Okay. 11:22, guys. I think I'm probably going to be done trading for the morning here right now. I think we're break even on the Russell, but we're up everywhere else. We are between the copper and the beans. We're plus 10, so that's 125. And gold is 180, so that puts it at 305, 535. We're up $535 per contract today. Now, what I was trying to do was get to 5,000 for the month. Let's fill out my little spreadsheet.
Now, that's important, guys, because, well, a couple reasons, but one I want to point out. Remember, the first trade got our equivalent of 2 points for the day. Okay, could have been done, but because of the trading room environment, we keep trading. Next trade got stopped out for the equivalent of 2 points. So now we're 2 trades in and at break even. That's where sometimes pressure and stress, confusion and worry kick in. But you watch Michael just continue to, and I mean this in the very best way, plod along, you know. By plod, I mean he just continued to take the trade setups as they came, without worry, without fret, you know, just methodical. Methodical is a better term than plod, probably.
Methodically trading.
Yeah. So I want that to be your takeaway from today. Up 2 points right out of the gate. Boom. Great day. Let's hang in there. Let's get some more. Boom. Now back to square zero, right? Not square one, square zero. Gave it all back. But continuing to trade, he managed to finish up with up $500 per contract. Okay. So you have to really question, is the additional exposure each day, for you as an individual trader, we don't have a choice because we're here in the function of teaching and training and all of that. But you, as an individual private trader, you do have a decision to make. Are you going to stop after you meet your daily goal? And it doesn't have to be 2 points. That's just a figure that's comfortable for us that we've worked with for a number of years. Yours could be a point, point and a half, 1.75, whatever. But just as you write your business plan and your trading plan, that's if your goal is to build an E-mini trading business. You're going to need those two plans. And you've got to, don't let your plan be, well, based on how I feel that day, that's how I'm going to do it. That's not good. See, that goal there is not definable. It's not measurable. Maybe it is doable some days it isn't. Consistency is so critical for a trader. And because the market itself is filled with inconsistencies, you have to be the consistent part of the equation. Got all these moving parts swirling around you, and you got to just, stand your ground, rock solid, and as all this stuff swirls around you, you are the constant part of the equation. So give that some thought. And those of you that are partners, I'll see you tonight in the partners meeting. Those of you that are not, I won't, but I'll see you here tomorrow if you're still on the free trial. And I'm going to bug off the call and get ready for the show at the top of the hour. Hope to see you all there.
All right. All right, Dwayne. We'll see you at the top. And this morning it took, 6 minutes and one trade. Oops. Didn't mean to do that. Where's my cursor? There it is. 6 minutes and one trade to get to $100 a contract. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades. 12 trades. All right. So on the month, we are currently at $4,740. I need to make $260 tomorrow to get to the 5,000 mark. I knew last week we weren't going to hit this or at the beginning of the week anyway, we weren't going to hit this 6,200 mark. I'll be happy with $5,000. $5,000 per month is okay. No, Bob, you have to become a partner. Okay, it's a partners only meeting tonight. Okay, this is where I am on the month, just so I can go through it. This is what I did today. I was +3 on the beans, +23 on crude, +18 on gold. I was even on the Russell, and I was +7 on copper. So the total of +7 on copper is 87.5. These are the totals for the month. Gold, after today, gold jumped back on top, then soybeans, then the Russell. Actually, then crude, then the Russell. That's the way it's gone for me on the month. I didn't count Dwayne's ES trade yesterday, okay, because I want to be exactly right. All right. I missed a bunch of nice trades today, guys, and I still managed to get up above $500 a contract. Hopefully you guys did well, too. Let's show you how to get into the next session here. Okay. The next session is coming up. Here it is. Go to CFRN.net. Go to CFRN.net. Scroll down to where it says click here and click there. Scroll down some more to where it says watch live now and click there. And fill out this little form. If you have not done this yet this month, just fill out this little form. You'll be sent a link today and tomorrow to get into the next session. This form is good for a month when you fill it out. It's good for a calendar month, so it's good until the end of June. Everybody's going to have to fill it out again on Monday. All right, and then it'll be good for all of July. Okay, so I will send you the link to do this, okay? If you haven't done it yet and you want to get into the next session, then I will send you this link. And sorry about that, Frank. I'll send you that link, and I'll send another one over here. All right, and my phone number is 949 423. I'm going to remember this one of these days. 6464. 949-423-6464. That's my phone number. If anybody has any questions, give me a call. Okay? If you are on the free trial and you want to become a partner and you have any questions about becoming a partner or anything like that, just give me a call, send me an email at support, whatever you need to do. Okay? And we'll answer all your questions. One more question. Do we also train partners to use the 10,000 contract chart with the dynamic SR? Is that part of the training? One of the layouts I got from... that thing is over 2 years old. That layout is 2 years old, so you can do that. We have stuff in the members area for that type of training and information. And maybe Dwayne will cover it a little bit tonight in the partners meeting. Maybe. Of course, you have to be a partner to get in there. But there are videos about that in the members area also, so it is covered in the members area. Okay. Copper is building that shoulder that I was talking about. I told you I thought it was going to drag it out just like it did on the other side. This shoulder took forever to build, and it chopped sideways, put in the head, and now we'll see if it's going to build the other shoulder over here. All right. I'll blow that up a little bit so you guys can see that. And you guys have the link to get into the next session. If you are a partner and you don't know how to become a partner and you want to know how to become a partner, send us a quick email. All right? Or you know what? If you're in here today, you'll be sent something. Today, something is going to be generated. That it'll be just a little short blurb that'll have a link in it. If you're in here on the free trial today, it'll have a little short blurb with a link in it. A little bit of information about how to become a partner. Okay, you can just use that link. All right, that's it, guys. I'm going to wrap it up, and that little email with the short blurb should probably go out in the next hour and a half or so, I imagine. All right, that's it. We'll see you guys at the top of the hour.